And just so that I know, if you're brand new, I'm trying to, recognize names. If you're brand new, you've never been on this call before, just put a 1 in the chat so I can get a gauge of who's brand new on this call right now. If you are brand new, just put a 1 in the chat. Welcome, 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 welcome. Good. Okay, let's see. Great. Good to see you. Welcome, Tutu. Welcome, Brianna. Welcome, Alex. Great to have you today. Welcome, Ethan, which I believe is Viv. Welcome, welcome. Good to have you guys today. Good to have you today. So let me share my screen so we can get started, and then we'll take it from there. Okay, let's see. All right, where we go. Okay, perfect. All right, so I want you to start off just by introducing myself, for those of you who do not know me. My name is Abi Akindele. I'm based in London, UK. I am a platinum leader and Forex trader with Kingdom Finance Academy, which is an association with IM Academy. I'm also by profession, I work as a global sales operations manager, and I'm also a wedding coordinator. So, I had, before getting into Forex, I had quite a few people, when I started getting into Forex, I had quite a few people asking me questions about, why Forex? Why did you decide to get into that? And essentially, I was brought up essentially to save, basically. My mum always told me that it's always good to save from a young age, and that's something that I was brought up doing. And I've always wanted to have, a life where, time is something that I can control. And also I wanted to be in a position to, be an assistance to my mum, be able to travel and just be able to do whatever it is that I like. And then I realized that, when I was saving, which is, something I still do today, I just realized that saving wasn't going to be enough to get me to where I wanted to get. Because, as you earn more, you've got more responsibilities, and you feel like you don't really see where your money is going. So, essentially what I wanted to do was trying to think about getting a different stream of income. So that is why I actually branched into wedding coordination. That was something that I had done, which I'm still doing for about 5-6 years. I've been doing wedding planning. And, it hit me last year when, the, pandemic started. And essentially all the weddings I had for last year completely went out the window. Like every single one of them was either cancelled or postponed to the following year. And essentially I kind of said to myself if I had lost my job, I actually didn't lose my job. So I was, I was happy that I was able to keep my main job. But I thought if I lost my job and the income that I was expecting from weddings had all gone as well, which it had, what would I have done? And it was kind of a wake-up call for me to really take having multiple streams of income seriously. It's something that I had already known, but it really woke up my eyes last year when all that expected finance went out the window. So I got into Forex. It was something that I had a huge misconception about initially. I thought initially, first of all, that I had to have, a huge amount of money to even participate in this type of industry. And because of that misconception, I shied away from it because I thought about it a few years back. But I just realized actually that's not necessarily the case. And then also when I did try to look at Forex before, all the lines, all the charts, all the things that I was presented by completely just went over my head. And I was just like, this is just not for me. I cannot do this. So I kind of left it then. And then, fast forward to just recently, I came to this platform and, asked my questions, and all the misconceptions that I had kind of just went away. because I got clarity. I got a lot of clarity about things that I was, concerned about, things that I just didn't have an understanding about. And then, I got introduced to a very simple way of trading Forex. And I was just like, wow, if I just known about this a long time ago, where would I have been now? But, there's never, it's never late for anybody to jump on to Forex. It's just as long as we have the education that we need. So essentially, every single one of us on this call are all already a part of the foreign exchange. And what is the foreign exchange? If we ask that first question, the foreign exchange is the buying and selling of currencies. So you may see sometimes, like, for example, the USD against the JPY, or the euro against the USD, or anything like that. So basically, this buying and selling of those different currencies is what takes place in this market. So this market is the largest and most liquid market, and it's completely recession proof. So what do I mean by that when I say recession proof? Currencies is something that is always going to be needed, regardless of anything. We're always going to need currencies. So it's completely recession proof. How can you gain from it? Like, if the price of a currency goes up, or if the price of a currency goes down, you have an opportunity to gain profit from that, regardless of the direction. As long as we can understand and essentially use the tools to help us forecast which direction it's going to go in, you can get a profit from any direction of which way that market goes. So I mentioned before, just briefly, that every single one of us on this call have all been involved in the foreign exchange, whether directly or indirectly. So the first example is when you travel, for example, if you were traveling to the States, if you're based in London, if you're traveling to the States, you would take your British pound and you exchange it for the US dollar. So that transaction that takes place from changing your local currency to the currency of the destination that you're going to is on the foreign exchange. So you've made that transaction, but you haven't really gained that much from it. So that's one way that you're already part of the foreign exchange. The second one is through your bank accounts. So this one was something that, when I understood this, I was like a little bit upset about it. I was a little bit upset about it because I didn't realize this was what was happening, lack of knowledge. But essentially, with your bank accounts, when you are saving or putting money in your accounts, you're saving there, you're putting in there, because you're leaving it for certain reasons. But did you know that the bank is actually taking your money and using your money as leverage in the foreign exchange? They are actually taking your money and then making big amount of money from the money that you've worked hard for. So while I'm sitting there thinking it's in my bank account, I've done well for saving in my account, they've taken it and earned a big profit from it. And it's something that they do day in and day out. And as I said, when I found out and I understood that's what was happening, it upset me. And I thought to myself, why can't I think the way the banks are thinking? Why can't I take the money that I've worked hard for and make my money work for me? I mean, they're taking mine and making it work for them, so why can't I use it for me? At the end of the month or the end of the year or whatever it is, they only give you back a small percentage increase, and it's hardly anything. So I was just like, no, this is something that I need to change. I need to upskill myself, and I need to understand how they do what they do so I can get it to work for myself. So those are the two examples of how you're already part of the foreign exchange. So the foreign exchange is a digital marketplace which runs 24 hours a day, 5 days a week. Okay, the market capital for this market is $6.6 trillion per day. And that number, I even need to update this slide, that number's actually gone up to around $7 trillion a day, maybe even higher. So what does that mean? That means the exchange, those transactions that are taking place, whether it's through travel, whether it's through your bank accounts, whether it's through active traders, equates to $6.6 or $7 trillion a day, which means there's enough money to go around for everyone to get a piece. But the only thing that's missing is the lack of knowledge and understanding of how you can use that for your benefit. Okay. So, you know, I mentioned before that I came to the platform. So the platform that I was referring to was the I Am Academy. So this academy gives you the education that you need to understand, number one, how to read the charts. The charts that I mentioned to you earlier before, that I was just like, when I first saw it previously, like years ago, I was like, this is just way too complicated for me. But I had the lack of understanding. So this platform gives you the education to understand how to, you know, identify the market trends. When I say trends, whether price is going up or price is going down, and certain different terminology that is used that can understand how the price is moving. So this is something that the platform gives you in terms of the education to equip you. Okay. Not only do they give you the education, they give you access to 6 to 7 to even 8-figure earners. These are people that know exactly what they're doing. They have, you know, grown their accounts to, you know, ridiculous amounts. So the fact that we can actually learn from these educated, very experienced traders is actually absolutely mind-blowing. So what do I mean by that? We have live sessions. These sessions come on between, let's say they come on 24 hours a day, different days in the week, depending on which time you plug in. So between Monday to Sunday, there's a session that you can plug into and learn live with these traders. Not only are they going to give you trade ideas, they're actually teaching you as well what it is they're looking at. So you're going to get into the mind of a very experienced trader and understand and think the way they think, so that you can train your eye to see things the way they see things. But, you know, as I said, also, you can also make money based on the trade ideas that they give out. These are trades that they'll be taking themselves and giving it out to those who plug into them as well. Okay, so that's the live sessions, but we also have pre-recorded sessions. We have thousands of hours of all the sessions that they have done previously that they've stored, so you can then access it yourself should you not be able to meet one of the sessions that is scheduled. So sometimes there's a certain session that I can't meet, but I might go to it afterwards, and that's how I use it as a secondary avenue of learning. So those things are available for you. So there's just so many sessions. There's like so much for you to take in and help you with your education. So that's the second thing. The third thing that we have is market scanners. So what is a scanner? A scanner is a system of inbuilt algorithms that scans the market. And when I say scan the market, it scans the currency pair, its movement in the past. And it looks for certain points of interest. And then those certain points of interest are then used as in the sense of forecasting to help you decide whether a price of a currency is going to go up or it's going to go down. So it takes a lot of the work from what you need to do. If anyone on the call does traditional Forex, you need to do an element of marking up charts yourself. And while it's still fine, that's something I still do. This is a different way of looking at things where things are pre-marked for you. So there's a lot of, you know, handiwork done for you in a sense. So with these scanners, the platform's going to educate you how to read it and to tell you what to look for. We look for things based on confirmations. Confirmations is what you use to add as a reason to why you take out a trade or why you do not take a trade. So these are the things that are available for you. So HFX. HFX is what we're going to be talking about today and for the rest of this week. So HFX is otherwise known as binary trading, which is a method of making money in minutes. This is time-based trading. So you as a trader will predefine how long you wish for your trade to be in the market for. So what do I mean by that? You can take trades between 1 minute, 2 minutes, 3 minutes, 5 minutes. You know, you can set the time of how long you will be in that trade for. Obviously, you'll get guidance of when those trades, how long that trade would be, whether it be with the educator who will tell you, take this trade for 3 minutes, Or once you learn for yourself, then you can pick up your own skill and then take trades outside of the educator's platform as well. With these type of trade as well, you can, you predefine and can see clearly how much profit you are going to make. And I'm going to show you this as an example a little later. So what is your job as a trader? Your job is simply to understand whether the price of a currency goes up or if it goes down. And we figure that out by, well, we put that trade in based on 4 different steps. So step 1 is selecting the currency pair. So how do you know which currency pair to select? You're either going to be on a live educator's call where the educator is going to call out the trade or the currency pair that they are analyzing. So that's one way. Or as you educate yourself, you can then look at currency pairs on your own outside of the educator's session. So that's 2 different ways, but that's when you're going to know which currency pair to take. Then number 2, select the time expiration. So I mentioned before, the time expiration is either going to be 1 minute, 2 minutes, 3 minutes, 5 minutes, but the fact is you can take a trade and profit from a trade as little as 1 minute. When I knew that blew me away. But these are the things that are happening today. People are profiting from trades as little as 1 minute. Okay. So the third one is select your order size. So the order size is going to be unique to every single one of you on this call. And that's going to be determined based on the initial capital that you invest in your broker account. So this will be the money that you're using. So I'll go into that a little, just after this slide to determine what that is. But that's going to be completely unique to you, and it's going to be between 1 to 3% of your account. Okay, but I'll break that one shortly. So number 4 is the order direction. So what do I mean by that? I mean, you're going to forecast with the education or the direction of the educator, whether the currency pair is going to go up or if it's going to go down. Okay, up or down. That's essentially what it is you're going to do. So if I just zoom in on this screen, I'm going to just zoom in on this screen here. Okay, so what we're looking at a example movement of a currency pair. Let's just say it's the GBP against the USD, for example. The blue line that you're seeing, that's going up, it's going up and going down, represents the price movement of the currency pair. So the currency pair, generally, all currency pairs move up and down. They all move up and down. But what you will notice with this is, even though it's moving up and down, if you take a step back and look at it, you'll see that the price of this example currency pair is going in an overall direction of an uptrend. You see it's going up and down, but if you look at it, it's going in an overall direction of an uptrend. Okay. But that's what the blue line represents. The order direction is this green vertical line, as well as the horizontal line. This represents the area in which you enter the market with your trade. Okay, so at this present moment, right here, I'm hoping you can see my mouse, right here, when you enter the trade, you entered at this point, and then you'll notice a horizontal green line. What does that mean? It connects with this orange line, which is your time expiration. So I remembered at the beginning, I said you can take either 1 minute trades or 2 minute trades or 3 or 5 or 15 minutes, depending. Whatever trade direction or whatever you've set as your time will represent the end of this time expiration. So if I put in a 3 minute trade, this orange line represents the end of the 3 minutes. I entered at this area, and then this 3 minutes shown by this green line, and the orange line is the end of that 3 minutes. Okay, so how do you profit from this? So with the tools that you're going to be given to equip you, or with the direction of the educator, let's just say, for example, we went in for a buy trade. a buy trade. Sometimes you may hear call, but this basically means that the price is forecasted to go in an uptrend. So you're going to enter your trade there. And then if we go in for a 1 minute trade, for example, you're expecting that price, which is the blue line, will stay above the green line by the time you get to your time expiration for a buy. Okay. If we're going in for a sell, sometimes we hear the term puts. You would see, instead of you seeing a green line that's going across, you will see a red line going across. So with a sell, what you're forecasting is you're expecting the price of that currency pair to go in a downwards direction. So using this example at the same time, if you entered your trade at this point for 2 minutes, for example, by the end of the 2 minutes, you expect that the price, which is this blue line, will stay below your entry price. So that's essentially what it is you need to do. But obviously, we don't just throw trades out there. We do things with knowledge and understanding. And that's what the Academy gives you, that education to understand when to go in and when not to go in, or use the educator themselves and just literally take the trade that they say. So there's 2 different ways, and both ways are very, very good. Okay. All right. So what I'm going to do now is, first of all, I'm going to speak about the trade size. So if you remember, I mentioned that your order size is going to be unique to you. So we do say that you should risk between 1 to 3% of your account. Some people say 1 to 5%, but I'm going to say 1 to 3% of your account. And it's very important that when we're trading, that risk management is the forefront of every single trade that you take. Okay. And the reason why we want to make sure that risk management is applied is because there are going to be some trades that you take that may not go in the direction that you forecasted it to go. And that's just the way the market is. Even the most experienced trader at the same time will take a trade and it will go in the opposite direction of what they expected it to go, which we call a lesson. Some people call it losses, but we call it lessons. We learn the reason why we lost something. Okay. And the reason why we want to make sure that we apply risk management is if you over leverage and put too much money on a trade, and that trade happens to be that one that goes against you, we don't want your accounts to be hit negatively. So we have to make sure that our risk management is always applied correctly. Okay. So how do we do that? How do we do that? I want to quickly just stop sharing now, just to get my calculator up real quick. Well, give me 1 second. Okay. All right. Okay. All right. So let's just say, for example, you start off your account with £250. And I mentioned before, at the beginning, I used to think that I needed a lot of money before, to take part in the foreign exchange. You actually don't need that much. You actually don't need that much. I'm going to use the example of £250. Okay. So what did I say? We're going to risk between 1 to 3%. Let's just think about 1% for now. So if you start off your account with £250 or dollars, wherever you're tuning in from, what you're going to do is take your account size, in this case 250, and then get a minus 1%. In this example, 1% of my 250 account is £2.50, which means for every single trade that I go in by, I'm only going to risk maximum £2.50 if I'm doing 1% trades. Okay, let's just say, for example, you start off with £500, for example. So I'm going to do £500 minus 1%, which means my 1% is £5 for a £500 or dollar account, which means for every single trade I take, £5 will be the maximum that I will take for each of my trades. So as I mentioned, every single person on this call is going to be completely different, because whatever you're going to decide to invest in is going to be completely up to you. But this is what we're going to apply. This is what we're going to apply to our trades. Okay. So I want to show you how your account could potentially grow using compounding. I'm going to get my compound. Okay. If you can't see my screen, Shante, let me know, but I think I'm showing my screen. I'm showing that the compound plan. So when we take our trades, we always want to follow a plan. We want to be very mindful of the things we're doing. We're not going to, we all have goals. We all know what we want to achieve. So it's very good when it comes to what you want to earn per day to be documented and something that you just put on the wall. Like my compound plan right now, it's on my wall and I follow that each day. So I mentioned for this example, I'm going to start off my account with $250 or pounds, or wherever you're tuning in from. And in this area here, the daily interest rate, this is the target that I want to grow my account per day. Some people, you know, have different, you know, goals, but I'm going to just put down 5%. What I'm saying is, of my £250 account, I want to have a goal of growing my account by 5% per day. Okay. So the next thing is the length of the term. So how long do you want to measure your goal for? Is that going to be 60 days? Is it going to be 6 months, 3 months, a year? You know, so I'm going to just put in 90 days now to just say a 3-month, you know, a 3-month view. Then we have the daily reinvest rate. So for each day that you have a profit, you would ideally want to reinvest your profits back to your initial amount. And the reason why we want to reinvest it is because we want to see our accounts grow. If you have an account, you make what's it called, a profit, and you're taking it out all the time, while it's still not a problem, you ideally want to see your account grow. And I'm going to show you why it's really good to do that. So what I'm going to do is I'm going to select 100%, which basically means I'm going to reinvest 100% of my profits per day to grow my account. Okay. Then I'm going to set my weekends to no, because we can't trade currencies over the weekend unless you're doing crypto, but for the purposes of currencies, we are not going to trade over the weekend. So with a $250 or pound account, with a daily interest rate of 5%, growth 5%, measured over a 90-day period, 100% reinvest of my profits, not working on the weekends. So I'm going to calculate that and see what the potential is. So as you can see here, the potential of your account following this plan means in 90 days, 90 working days, your account could grow to £20,000 or dollars. So for any of you guys that are on the call, would you be happy with a potential, knowing that you can have the, you know, the knowledge, the wisdom, the understanding, the mentorship to help you potentially grow your account to 20,000? Would any of you guys on the call be happy with that progress? If you're going to be happy with that progress, just put a 1 in the chat so that I know how you guys are feeling about that. Yes, exactly. 100%. Because when you think about what, you know, your bank's giving you, what your workplace is probably giving you in 3 months, you know, if anyone's getting, you know, 20K in 3 months, then, you know, from your workplace, then let me know and let me apply for your workplace. But I would be happy with the potential of growing my account based on this. So one thing I'm going to mention, as I mentioned, is this is a potential. So in the world of Forex, there are going to be times where the trade idea that you take or you put forward may not go in your direction. But this is based on having 100% accuracy. And if I say to you that you're going to get your trades 100% accurate all the time, I would be lying to you and I'll be giving you a massive disservice. So we need to be comfortable knowing that there's going to be potential lessons. That's the word I'm going to use for losses, lessons, because we're always going to learn for why a trade may not go in our direction. The aim is to have more wins than losses. There will be losses or lessons, but we want to have more wins. Okay, so even if we don't get to 20K, but if we follow this with the accuracy on, the trade ideas that I've been giving out, we're looking at 80 to 90% accuracy. So, if we were saying, oh, you're only going to get a 10% accuracy rate, then I'll be worried. But we're looking within the 80 to 90% accuracy rate when it comes to our trade ideas. So getting towards that number is not impossible. Okay. So how do we get towards that number? If you just scroll down, I'm going to scroll down. And if I started this today, it's going to start my date from tomorrow. For day one, all I need to earn is £12.50 or $12.50. And I know that looks really small. I remember when I first got shown this compound plan, I was like, "What was that it? Was that it?" But you start off small and it's a ripple effect, or it's a compounding. You compound your account and you'll see your account grow each day. So from day one, your first target is to make £12.50. By the time we get to day 50, for example, your target is going to be 136. By the time we get to day 70, you're going to see how your daily target is growing. So that's your targets. But if we look up to the side, this is how your balance is going to be growing as well. Everything in the red shows your balance, your account that started off with 250 growing over the course of the period. And that's why we say we want to reinvest our profits, because if we, for example, took 50% out every single day, for example, if I calculate that now, can you see now we're projecting a profit over the 90 days of 2,300. So that's a big difference between the 20,000, potential 20,000 and the 2,300. So the power of compounding is shown right here. And that big difference. So that's something that we just love to do, because we want to grow our accounts. And I think the reason why, seeing in a small amount here is good, because you get to learn, while you're early, while you've just started and you're not knowing anything, you can still earn, but deal with your learning while dealing with small amounts. By the time it comes to you dealing with bigger amounts, you've got so much more experience, you've got so much more confidence. The logic that you're going to apply to earn the £12.50 is going to be the same logic that you're going to apply by the time you're getting down here. So don't look at the first day as something small. It's just a cog. It's just a piece that adds together to see the big picture. So that's just why I wanted to show that one to you now. Okay, any questions on that, feel free just to put it in the chat. Okay. All right, so what I'm going to do now is I'm going to go through I'm going to go through a demo account, because what I want to do is, for those of you that joined the call much earlier on, you'll notice that we were taking live trades just before 5 o'clock. So what we want to do is we want you guys to sign up to a demo account so that you can start trading on a demo account as soon as tomorrow. I'm going to show you how to do that. And the whole point of the Taster Week is to plug in each day and see, and get used to the educator. So what we're going to do is, from tomorrow, we're going to plug it into a live educator. The one we're going to plug into is called Millie Mills. She's going to be on between tomorrow and Wednesday. I think she's out on Thursday. And then on Friday, we have another educator that's going to be coming on. So we want you guys to use this opportunity to log onto your demo account and practice what you will be doing as an active trader, but using a demo account. So you don't have to worry about anything. Just use your demo account, but get used to it. I know we have some people on the call right now who have taken and used the demo account. I believe last week, if you're on the call and you took your demo account last week and took some trades, just put something in the chat. Let us know, let everyone else on the call know how your experience was just last week from using pocket options, which I'm going to go through. I did with Denver. Good. How do you compound your account? So I'm not sure if I saw that late. Was that, does that make sense? The compounding, do you want me to go over it again? I don't know if I saw your message late. If you want to go over it again, just let me know. I'm not sure if you sent that late or. Okay, I'm going to move on. You can use. Okay, cool. All right, so I'm going to go back to my presentation and give you an example of the platform, and then I'll go to the actual platform as well. All right. Okay, all right, so all right, so the demo platform that we're all going to have access to, Shante, if you don't mind, can you put the Pocket Options website in the chat, please? Thank you. So for all of you guys that are new, the website that Shante is about to put into the chat, I want you to take it, and I want you to sign up. It's free. You don't need to. Do not fund this account, please. It's just for demo purposes only. Yeah. So, so I'm going to go through it, and I'm going to go to the actual demo account as well. So when you first log in, and you're all set up, you're going to see this page. And what you're going to notice is, on the left-hand side where I've starred this is the currency pair. So in this case, it's the Euro CAD. So this will be where you will select your currency based on your own analysis or the analysis of the educator who will tell you which currency pair to select. If you click on that, and you will see this page, and this will be the area in which where you're going to toggle between the different currency pairs depending on which one we're looking at. So what you'll notice is by each currency pair, there is a percentage next to it. So this is the payout rate. So if you deposit, if your trade, which I mentioned should be 1% of your account, if your trade was £10 or $10, for example, and you selected Euro CAD, you'll notice it has 87% next to it. So what does that mean? It means for the £10 you put in, you're going to get a profit of 87%. So for £10, your payout would be £8.70 or $8.70. So if that trade goes in your direction, you'll get your £10 back that you initially traded, plus your £8.70. If you went to a different account, for example, that was 70%, if you put down £10, you would get £7 back. So that's basically what those percentages mean. And ideally, when we take trades, we want to take trades that have a minimum of 70% or above, because it's just better to have a higher number. Okay, well, we've got this NZD chef, which is paying at 34%. It's just not worth it. So aim for 70% and above. Okay, so that's number one. Number two is to select your time expiration. So I mentioned to you before, you're going to take either 1, 2, 3, or even 5-minute trades. So how do we do that? We look in the area here where this is starred. If you click onto that, this page will come up, and M1 means 1 minute, M2 means 2 minutes, M3 means 3 minutes, and so forth. So When trading live with the educator will tell you how long to be in that trade for. If you hear her say 3 minutes, you're going to select M3. Okay. Now the second one, or the third point, apologies, is your trade amount, which is the other star here. In this case, it's showing 25. So that is where you're going to put 1% of your account. So if your account is 250, 1% is £2.50 or $2.50. That is what you're going to enter in this area. Okay. As I mentioned, that's going to be unique to every single one of you in this call. Then we have this, this bar, just kind of, it's a bit closer up where you would see this red button and you'll also see this green button. So the red button represents, you will hear either a sell or you will hear the word puts. That's what she will call out. But this terminology, you'll get accustomed to it. What does this mean? This basically means that through the analysis, we have forecasted that the price of the currency pair is going to go in a downward direction. So that is when you would select the red button. The green button is a call or a buy. You'll hear either one of those. That means you're forecasting the currency pair to go in an upward direction. Okay, so that's the two. Those are the two things that you need to look out for. And how do you look out for that? It's either you're going to do your own analysis or the educator is going to tell you very clearly, I'm looking for this type of trade. So if we look at the bottom here where I've got the typical educator trade call out, the educator is going to say, I'm looking at USD JPY, for example, or Euro USD, or any currency pair. That's what they're going to call out. And then they're going to say, I want to go in for 3 minutes, or I want to go in for 1 minute. So when they call out the currency pair, you're going to select your currency pair from the beginning that I mentioned here. Then they're going to say, I want to go in for X amount of time. You're going to get your time ready. So you're going to select the time. And then she's going to say, I'm going to go in for a call or a put. At this point, you're not going to press any of those buttons. You're just getting ready for the next instruction. And what is that? You're going to get given 3 numbers. So I've highlighted this in yellow. And this number represents the last 3 digits of the strike price, which I'm going to show you shortly. The strike price can be found in this area. And we're focused on the last 3 digits. Or if we're on the charts, we can see the strike price at the side. You can see these ones in the last 3 digits. So if you remember, I mentioned that the blue line represents the price movement. So price, as I mentioned, is always going up and down, always going up and down. So when we take our trades, the educator will tell you a number that they're waiting to see in this area, either in the strike price at the below or at the side. So for example, the educator may say, for example, I want to take a buy at price of 330. So right now, price is sitting at 335. So you want to wait for price to come down to 330, and then you'll take your trade, whether that be a buy or a sell. Another example, the educator may say, I'm waiting for price to be 350, the last 3 digits. So price right now is sitting at 335. We want to wait for price to rise to that area. And once it gets to that area, we then take our trade. So everything is kind of done in stages. I just want to quickly recap on that one, just to make sure that we're clear. The first thing that you will hear is the currency pair. They'll call out the currency pair. You get your currency pair ready. You get it ready. You'll select your currency pair. Then she'll mention the time. You will select your time, whether it be 2 or 3 minutes or whatever minutes she mentions. You'll select your time. You'll then put in your trade amount, which is 1% of your account. She'll also say, I want to go in for a put, which is price going down. I want to go in for a call, which is price going up. At this point, you don't press anything. You just get ready for which direction she wants. Then she'll call out the price, which would be a 3-digit number, which is the last 3 digits of the strike price. That is where price is, the currency pair, where price is. We're going to wait for price to hit that area. As I mentioned before, if we're waiting for 340, price is at 335, we're going to wait for price to rise up to 340. Once it hits 340, you will then press your buy button, if that's what she called out, or you will press your sell button, if that's what she calls out. So that's the process. So I'm going to quickly go on to the Market Options website and just give you some examples. And this is one of the demo accounts. Okay. So as I mentioned before, she's going to call out a currency pair. So you're going to press this button and select the currency pair, ideally one that's 70% or above. So I'm going to select the, let me see, USD JPY, for example. Once I click on that, the page will update to reflect that currency pair. Then she's going to mention the time, so 3 minutes or 1 minute. So here, I'll press that, and then I'll select the time that she's told me to take. So in this case, I'm going to take just 2 minutes. So M2, that's 2 minutes. I'm going to put in my trade amount, so £2 or $2.50, for example, because that is 1% of my £250 account. And then she's going to say, I want to go for a sell, for example, just an example. At that point, I'm not going to press the button. I'm just getting ready. So the strike price is here. Right now, it's at 108.758, apologies. And that represents where price is. You see this blue line is currently, in the same place. But as soon as that one drops, that strike price will update. So it's kind of flatlining right now. Let me go to another currency pair that's actually moving. Let me try USD. Actually, let me refresh my screen. I think it's crashed a little bit. Give me a second. This is not moving. Okay, it is moving. Okay.
If you try and zoom out, Abby.
Yeah. Okay.
That's it.
Okay, perfect. Okay, thanks, Shante. Thanks. All right, so price is going to be fluctuating. So this is the strike price at the moment. It's at 5. Okay, it's moving. It's at 512. This will be here. As this changes, as that changes, this changes here. Okay. So for example, the educator may say, I want to go in for a sell, for example, at 517. So what am I going to do? I'm going to wait for price to show me 517, which will be the 3 digits down here, or you can look at it here, depending on your preference. And then once I see that, then I will go in for my trade. So I've applied no analysis here. So I'm going to just go in for a trade now, just for demonstration purposes. But for this example, I'm going to go in for a buy. So 2 minutes buy. So you can see there's a green line. We'll just zoom in quickly. There's a green line. This green line represents my 2 minutes. So because I've gone in for a buy, I expect price to stay above the green line. If you go to the trades area here, at the moment, it's telling me that my payout is going to be £4.40. So the currency pair that I had selected has, I can't remember what the payout rate was. I can't remember what the payout rate was, but that's essentially my profit plus my initial £2.50 that I have entered. And what do I want to see? I want to see this blue line. I want it to see it's saying above by the time it gets to the end of my 2 minutes. If it stays above, I get a profit. If it comes below, I have a lesson, and I have to learn the reason why that went down. So, as I mentioned before, no analysis. So whatever direction this goes in is just for demonstration purposes. It looks quite good right now, but we don't just put money in the market like that. We always apply analysis. So you can see at the side here, It tells me how much time I've got left. So it's counting down, 10 seconds left. And then a box will show up letting me know that I have essentially profited from that trade. So that is what's about to show now. And in that case, I profited. So it's as simple as that. Obviously, there's analysis that needs to be done, but I just need to get a currency pair, set my time, set my trade amount, and put in the direction that I want it to go in, and then I profit from that trade. Okay, so that was a buy example. If I go in for a sell example, where you saw that green line, you will see a red line instead. And essentially, what do I want to see? By the time we get to the end of that 2 minutes, I want price to be below the red line that will appear, because that's what I forecasted. If it stays below, by the end of that 2 minutes expiration, I profit from that trade. If it comes above my entry area, then I have a lesson. And the good thing about this, what I like, is you can just be, if you're going for a buy, for example, you can just be above your entry just by a fraction, and you'll still profit from that trade. So the idea is that we want to get in at a good price, but you get direction from the educator. And at the same time, the platform will also give you the education to understand when you should go into the market, you know, what price. There's a lot of, you know, indicators that we have that will help you with that work. So it's not as daunting as it may look. It's actually quite simple. And I couldn't believe how simple it was. Once you get the theory, you just have to duplicate it and do it over and over and over again. And you'll see how this just works wonders for you. So it's coming up to 6 o'clock now. So I'm going to cut this, cut this short. So what I want to just do is make sure that every single one of you who's brand new takes the website address for the Pocket Options demo account. Set yourself up. Do not fund the account. Do not fund the account. Set yourself up, and we're going to be taking live trades tomorrow, but tomorrow it's going to be at 4 p.m. UK time. 4 p.m. UK time, just for this, for this week, 4 p.m. UK time. So it's 1 hour earlier than you expected to start, but that's so we're in line with that trader. And what I will do as well is once we finish the session, I will go over where is she's looking at, certain things that she's looking at, but we just want to be accustomed to her voice, hearing her direction, hearing her instruction, and literally just that is just one method of making money. There's obviously other methods as well, but that's just one method of making money, and that's what we're going to do this week. So I hope that was insightful for you. Do come again tomorrow again at 4 p.m. With your accounts ready. Yes, do not fund your account with this one, please. Are there any questions while we've got about 4 minutes left for this session?